Good morning and welcome to 3 Minutes on Markets and Money. Let's take a look at some individual stocks today that have been moving in the markets. Apple, of course, one of the big things because, as we talked about earlier this week, they've now eclipsed $2.5 trillion of market capitalization. So if you're taking a look at their market cap to GDP, they make up about really 10% of the economy. Pretty amazing, I mean, when you actually think about it. But that's just kind of what's going on here with markets, this continued elevation in technology stocks, particularly in the FANG stocks, Apple, Facebook, Microsoft, etc. Fairly aggressive here. And again, money really starting to crowd into these larger cap names. This is where a bulk of both stock buybacks are occurring, but also too, this is where liquidity lives at the moment for a lot of major hedge funds and mutual funds and pension fund managers that need liquidity to move in and out of stocks easily. Jumping down to some of the stocks that are reporting after the bell today, DocuSign has had a fairly consolidative move here lately, bouncing off the 50-day moving average, not making a lot of advance, getting a little bit overbought here, but they're going to announce earnings after the bell today. So this is one of those stocks where you're either going to get a fairly big drop if it breaks below the 50-day moving average, or you can get a nice pop out of it and it'll set new highs. So the question is, if you're long the stock right now, simply just keep a watch on 280 is kind of your support level for DocuSign. A break below that, you're probably going to come down and retest the 200-day moving average. So that would be a decent stop level. If it reports good earnings, break out to new highs, of course, keeps you in the game, at least for now. The other one is, of course, Broadcom. And look, semiconductors have been doing well lately. We talked about buying NVIDIA a few weeks ago. We're up about 14% in that stock now. Broadcom continuing that really kind of that trend in semiconductors, seeing a pop here recently, moving to new highs, dropping back down towards support. They announced after the bell today. So a good earnings report should set new highs for the stock. Keep a stop at basically between 470 and 479 on your position. Again, a break below that, you're going to probably see lower levels. So it's a decent kind of risk-reward range for earnings coming up after the bell today. American Eagle Outfitters, of course, this is one of the retailers. And again, retailers have not been doing well. Discretionary have not been doing all that great, of course. This is after a huge run in these stocks because people had a lot of money to spend at home, so they were shopping online. And that's really not done a whole lot here lately, sitting right at the 200-day moving average. They're going to report earnings after the bells today. Probably going to disappoint. We could very much see a drop below the 200-day moving average. Not much support below that. So again, stop there at 29.22 on American Eagle Outfitters. A move to the upside is probably a good opportunity to sell and take some profits here. Lots of resistance overhead between 32 and 34. So again, if you get a pop after the bell on earnings, might be a good opportunity to move this money out of something into somewhere else that's performing a bit better. Talking about performing a bit better, let's talk about financials. Financials have been doing well here as of late, and this has kind of been this whole idea of this reflation trade, higher rates, etc., yield curves. Financials are on a buy signal. Money flows are good. This is the XLF, which is the financial sector ETF. Nice double top being put in right now. So again, you've got lots of resistance sitting right here at $39 a share on XLF. Lots of support here at $37.18, which is the 50-day moving average. So as long as you really don't violate that, you're pretty much in good shape. So it's a good, 37 is your stop level on XLF. Again, a break above 39. That's going to set you up for a move higher. I suspect, though, that we're about to see some more weakness in financials over the next couple of months. So again, this is one of the areas you might want to be a little bit more careful with. Reduce some of your exposure to financials, kind of adjust your risk exposure overall to your portfolio. That's the stocks on the move today for 3 Minutes on Markets and Money. We'll see you next time.